What is up, guys? Welcome back to another video. Today, we are going to be looking at how I go about finding your draw on liquidity. Um, can also be your daily bias, some top-down analysis, and how I look at the markets. Okay, and where is price likely to move to next? All right. So, before we get started, don't mind hit that like and subscribe, and let's get into the video. So here we have the NASDAQ on what is this, Thursday, the 28th. Okay. And we're here on the daily time frame. You can see that we've started to move down from these all-time highs, creating this bearish candle. Okay. We took out the previous day's high here. Okay. Previous day's high. Didn't mark it off. Anyways, previous day's high here. So we left this inefficiency here from this candle's wick to this candle's wick. Okay, so we have this daily fair value gap, buy side imbalance, sell side inefficiency. So the market has only traded on the daily time frame for buyers. Okay, so the market needs to come down and offer this area fair value in the form of selling opportunities. Okay, in the form of a bearish candle. Okay, so meaning this is likely my draw on liquidity. Okay. Everyone in my Discord knows the magnet. It's a famous inside thing. So the magnet, this is our draw where price is going to want to be pulled to because there's inefficiency here to balance, right? So if we drop down to 5 minute, okay. We also have one thing I wanted to note. We also have the weekly opening price where we opened up on Tuesday, the day after Christmas. And we have this volume imbalance here and this volume imbalance here. Okay. So some more inefficiencies. Um, let's drop down to the 5 minute. Okay. This was Thursday. Let's move price forward. So Friday opens up. Okay. So here we have Friday opening at midnight, right? So opening candle opens. We create this high in London. Okay. We take out the Asian lows. We slightly tap into one standard deviation higher of the central bank dealing range. Okay. But remember, this is our draw on liquidity, which lines up with -1 on the bottom end of the standard deviation from the CBDR. But this is our daily fair value gap in blue here. Okay. Remember this? Okay. So we're anticipating price to be drawn to this level. Okay. So, and we're on the 5 minute time frame. Okay. Let's move price. So now we're just waiting for time, right? So we can see we started to take out the Asian lows, heading for the PM session lows from Thursday, right? So we're sweeping there. Coming into the New York session. We have the 9:30 open. Okay. So the futures market opens at 9:30. Okay. We left these inefficiencies up in here. Okay. we kind of have this little breaker and order block in here. Okay. But what I did, and this is how I made money on Friday, I took this trade. Okay. So we take the fib from the London swing high here to the swing low. Okay. Where we made this low at 815. We started to retrace, right, and bounce higher. You want to look at set 62 to 70.5 as an area for entry. Okay, so I was looking at 62, which lined up with this 5-minute bearish fair value gap. Okay, so I have this 5-minute fair value gap. We have this order block in this area. And we know that price is most likely going to want to draw to this daily fair value gap, which gives us a nice level here at negative 15 right there. Okay. We're also looking for price to climb up here. We're above midnight opening price to add it to our confluence. Okay. With that being said, before we move forward, if you want to take the same trades we call in Discord, click the link below. It's only a one-time payment right now. It's on discount for $59.99. Lifetime access to the Discord. We trade Tuesdays through Thursdays. Tuesday, Wednesday, Thursday. And then we have the boot camp that starts this Tuesday, January 2nd to the 22nd. And it'll be each Monday after the New Year's. And we'll dive deep into all of these concepts. And this bootcamp also includes the Discord access for a lifetime. So you're getting both in here for the month of January and then lifetime Discord access. Or if you want all three, go ahead and grab the trading master course for it's 33% off right now. And the link is in the bio. So if you want a little sneak peek of the Discord in here, okay, we call this out. Let's see here was Friday morning, 62 level there. Okay, which is right in here. So if we look on the 15-minute time frame, you can see it's inside of this 15-minute fair value gap. And then I like this high, low, higher high in here area in this order block. So if we play price forward, see we get tapped in there, right? So everyone is anticipating price to go higher, right? So we're catching all of these retailers. You see these clean highs all in here. Okay, so we're taking out liquidity, and then for good measure, we take out liquidity one more time, right? We're kind of attacking this trend line here because people are thinking this is a break retest, and we're going to send it higher, right? So retail would want to look at this as support, right? So, people keep getting in. This is the real support. We're going to head higher. But we know that the draw on liquidity is this daily time frame below us, right? So using our 5-minute fib retracement level, just inside our 950 to 1010 macro, ICT macro, we get this 5-minute fair value gap entry. We get a pullback. If you missed the first entry, could have got in here. I believe there was a volume imbalance. Uh, right in here, this volume imbalance came back up a couple times. Happening over here, respecting this one. So notice the wick, but the candle bodies were staying inside of this 7 a.m. high, this 1 minute fair value gap in there. So the wicks will do the damage, but you always want to watch how the candle bodies are closing to read the price action. Okay. So again, we're anticipating price to head down here. So it could be short at 62. Stops above the high there. And then we would target here. Okay. So this is your sell side liquidity, but this is our ultimate daily draw on liquidity and causes our bias to be bearish, right? So we're looking for bearish opportunities, which is exactly what we're doing here. We drive lower. This bullish fair value gap becomes an inverted fair value gap, right? We drove lower, then we respect 50% of it. Right there, could be a seller there. And then, boom, drives even lower. Now we can notice if we look on the daily, we can see we drove all the way down to the weekly opening, that volume imbalance here and in here before we retraced for the end of the day. Okay. So with that being said, don't forget to hit that like, comment, and subscribe. And until next time, guys, if you have any questions, comment below. And everyone have an amazing, happy new year. And let's elevate your trading this year. Get in the Discord, jump in the community with us. Everyone's getting payouts and funding. Just this month of December, we had 3 people get their funding certificates. So join us for the live streams and join the January boot camp with us. Okay. It's only a one-time payment. So we'd love to have you guys in there. Until next time, guys, be safe.